They spent 100 years building a fortress of gold, thinking they were untouchable. But in the digital age, a century of reputation can be erased by a single, sharp panic.
Friday afternoon, they were the kings of the global market. By Sunday night, they were ghosts.
Case File 003 reveals the terrifying truth about the weekend the global elite stopped breathing. Visible to the eagle, the autopsy of a fallen empire starts now.
Hidden from the world, visible to the eagle.
To understand how an empire dies in 48 hours, we have to travel back to a world that no longer exists. We have to go back to 1856. Imagine a world of steam engines and telegrams where the map of Europe was still being drawn in blood and iron.
In a quiet corner of Zurich, a man named Alfred Escher was looking at the Swiss Alps. To everyone else, they were just mountains. But to Escher, they were a barrier to progress. He realized that if Switzerland was going to survive the Industrial Revolution, it didn't just need factories, it needed a financial superweapon.
Escher was a titan of his time. He was a politician, a railway king, and a master strategist. But his greatest creation was the Schweizerische Kreditanstalt, the bank we would eventually come to know as Credit Suisse. He didn't build it for the average person. No, he built it for the elite who wanted to fund the future of Europe. Think about the scale of this ambition. In 1856, Switzerland was a poor agrarian nation, but through this bank, Escher funded the Gotthard Railway, a project so massive it was considered the Apollo mission of the 19th century. He was literally carving tunnels through solid rock, and he was doing it with the world's first truly global capital. For the next century and a half, this institution became the definition of stability. It became a fortress. While the rest of the world burned in the fires of the First and Second World Wars, the vaults in Zurich remained cold, quiet, and perfectly secure. They weren't just storing money, they were storing the world's trust. The Swiss bank account became a global legend. It was the ultimate status symbol for kings, dictators, and billionaire industrialists. If you had money at Credit Suisse, you were untouchable. They were the lender of last resort, the silent partners in the growth of the modern world, the guardians of the global status quo. By the time the 21st century arrived, the scale of this empire was almost incomprehensible. We are talking about over $1 trillion in assets under management. To put that in perspective, if Credit Suisse were a country, its economy would have been larger than Saudi Arabia or Switzerland itself. It was a financial sun, and everything else orbited around it. But as the eagle knows, the bigger the shadow, the deeper the darkness. Behind the marble pillars and the expensive suits, a culture of reckless gambling was taking root. The bank was no longer just a vault, it had become a casino. And in a casino, the house eventually loses. The first major crack in the foundation appeared in 2021. It wasn't a slow leak, it was an explosion. A secret investment firm called Archegos Capital collapsed overnight, and Credit Suisse was left holding a $5 billion bill. $5 billion vanished in a single agonizing blink. The world started to ask, if they could lose that much that fast, were they really a fortress? The eagle sees what the bankers ignored. This wasn't just a bad trade, it was a symptom of a rotting system. The empire had forgotten its history. It had traded its 1856 foundation for 2021 greed. And as we are about to see, the market does not forgive. By the start of 2022, the fortress of Zurich was no longer silent, it was screaming. For decades, Swiss banking relied on one thing: discretion. But in a world of smartphones and instant leaks, secrets are a luxury that Credit Suisse could no longer afford. Then came the Swiss Secrets leak. Over 30,000 clients, their private data spilled onto the internet for the world to see. Dictators, money launderers, and sanctioned officials, the veil was torn off, and for the first time in 160 years, the world saw the rot in the vault. But the market doesn't care about morality, it cares about math, and the math was getting ugly. While the bank was busy fighting scandals, the global economy was changing, interest rates were rising, and the cheap money that fueled the casino was drying up fast. October 2022, this is where the story shifts from a tragedy to a thriller. A single tweet, yes, one single post on social media suggested that a major investment bank was on the brink of collapse. It didn't name Credit Suisse, but everyone knew. The internet doesn't need a name to start a fire.
In the old days, a bank run meant people standing in line in the rain, waiting to withdraw their cash. It was slow, it was physical. But in 2023, the line is invisible. It's $1 billion moving at the speed of a click.
The eagle watched as the credit default swaps, the insurance policies against the bank's failure, shot into the stratosphere. It was a signal fire in the middle of the ocean. To the sharks in the market, it wasn't a warning. It was an invitation to feast. Enter the Silicon Valley bank collapse in early March 2023. A world away in California, a bank died in 48 hours. It was the spark that jumped the Atlantic. Fear is the most contagious virus on Earth, and Credit Suisse was already in the intensive care unit.
Wednesday, March 15th, the day the world stopped believing, the chairman of the Saudi National Bank, Credit Suisse's largest shareholder, was asked a simple question on live television: will you provide more capital if the bank needs it?
His answer was 2 words: absolutely not. 2 words that acted like a guillotine. Within seconds, the stock price didn't just fall, it evaporated. It dropped 24% in a single afternoon. The empire wasn't just cracking anymore, it was shattering. The Swiss National Bank tried to step in. They offered a $50 billion lifeline. $50 billion, a sum that could buy entire cities. Usually that would stop the bleeding, but this time, the market didn't even flinch. Why? Because the market eagle knows that money can't fix a lack of trust. By Thursday night, customers were pulling out $10 billion an hour. $10 billion. Think about that. You can't print money fast enough to outrun a digital stampede.
Behind the scenes, the Swiss government was in a state of total panic. This wasn't just about one bank. If Credit Suisse fell, it would take the entire Swiss economy with it. It would be the Lehman Brothers of Europe, a financial dark age. The secret meetings began in the dark of night. No lawyers, no slow negotiations, just the Swiss finance minister, the central bank, and their only hope, their greatest rival, UBS. The bank Credit Suisse had looked down upon for a century was now its only survival.
Friday night, March 17th, the markets were closed, but the world was watching the lights in the Zurich government buildings. They had exactly 60 hours to save a century of history before the markets opened on Monday morning, and the world ended. The clock was ticking. The weekend of death had begun, and as the eagle watched from the shadows, the terms of the deal were being written in blood. The empire wasn't being saved, it was being sacrificed. Saturday morning, March 18th, while the citizens of Zurich were drinking their morning coffee, the global financial system was sitting on a ticking time bomb. Inside the Swiss finance department, there was no coffee, only adrenaline. The government realized that if they didn't kill Credit Suisse by Monday morning, the contagion would spread to every bank in Europe. This was no longer a business problem, it was a national security threat. But there was a problem, a massive multi-billion-dollar legal problem. The Saudi National Bank and other global shareholders had legal rights that protected them from a forced takeover. Usually, a merger of this size takes months of voting and paperwork. Here, they had 48 hours. So, the Swiss government did the unthinkable. They changed the law over lunch. They bypassed the shareholders entirely. They stripped away the democratic rights of the owners to save the system from itself. UBS, the predator turned savior, smelled blood in the water. They knew the government was desperate. Their first offer was $1 billion for a bank that was worth $100 billion just a few years prior. It wasn't an offer, it was an insult. It was a message to the world. Credit Suisse isn't just failing, it is officially worthless. The negotiations were brutal. Panic in Washington, panic in London. The US Treasury was on the phone every hour, breathing down the necks of the Swiss regulators. Why? Because the market eagle knows that in a globalized world, there is no such thing as a local bank. If Switzerland burns, Wall Street catches fire. The dominoes were lined up and the world was holding its breath. Sunday afternoon, the final blow. To make the deal work, the Swiss regulators did something that sent a shockwave through the entire world of finance. They wiped out $17 billion worth of AT1 bonds. In an instant, wealthy investors around the world saw their safe investments turned into zero. The hierarchy of money was flipped upside down, and the rules of the game were rewritten in a single, terrifying heartbeat. By Sunday evening, the deal was done. UBS would buy Credit Suisse for $3.2 billion. A 167-year-old empire sold for the price of a few Silicon Valley tech startups. The fortress had been conquered, not by a foreign army, but by its own greed and the cold, digital reality of a weekend deadline. Monday morning, the markets opened. The world expected a global crash, a total meltdown, but instead, there was silence. The execution had been clean. The body of Credit Suisse had been buried inside UBS before the first bell rang.
The crisis was managed, but the eagle sees the scars that remain. The world of banking would never be the same again.
This wasn't a rescue, it was a controlled demolition. For the first time in history, we saw that a global systemically important bank, a bank supposedly too big to fail, could actually disappear. The myth of too big to fail died that weekend in Zurich, and in its place, a new fear was born.
So, what is the fact-based reality for the future? We have officially entered the era of the digital bank run. When fear moves at the speed of light, no amount of gold in a vault can save you. The foundation of the next 500 years of business won't be built on marble pillars. It will be built on the blockchain of trust. Transparency is the only currency that matters now.
Look at the data. Since that weekend, we have seen a massive migration of capital. People are moving away from legacy giants and toward transparent systems. The world is finally realizing that a bank is just a ledger, and if that ledger is hidden from the public eye, it is inherently dangerous.
The market eagle predicts a consolidation of power like we have never seen. Soon, there will only be a handful of mega banks left on the planet. But as they grow larger, they become even more fragile. The bigger the empire, the faster the weekend death. We are building taller towers on shakier ground.
In 1934, the world created deposit insurance to stop the panic of the Great Depression. But in 2026, insurance is meaningless when an entire population pulls their money out at once via an app. We are moving toward a real-time economy, a world where your bank must prove its solvency every second or face extinction by lunchtime.
Alfred Escher's dream of a Swiss engine for the world didn't die because of one bad year. It died because the world outgrew the secret vault. In the modern age, secrecy is a red flag. Transparency is no longer an option for the elite. It is a requirement for survival.
The stakeholders of the future aren't just the men in silk suits in Zurich. They are the millions of people watching the charts on their phones in Tokyo, New York, and Lagos. The crowd is now more powerful than any central bank, and the crowd is unforgiving.
The $100 billion mistake wasn't a single bad trade or a rogue employee. It was the arrogant belief that time equals safety. Just because you survived 100 years of history does not mean you will survive the next 100 hours of social media panic.
This is the ultimate lesson of Case File 003. Stability is nothing but a shadow. In the market, you are either evolving with the speed of light or you are rotting in the dark. There is no middle ground. There is no safety in the status quo.
As we look at the horizon, the eagle sees the next targets. The rot isn't limited to Switzerland. It's in the shadow banking of the East. It's in the over-leveraged tech giants of the West. The next weekend of death is already being written by the markets as we speak. History is a wheel that never stops turning. 1856 was the rise. 2023 was the fall. What comes next will be built on the ashes of the empires that thought they were immortal. The new giants are rising, and they won't look anything like the old ones.
The data is clear. The trend is locked. The next time you see a stable giant, look closer. Look for the cracks in the marble, because while the world sleeps, the eagle is always watching.
Case File 003.
Closed.
Subscribe and join the flight. Market Eagle.